Welcome, traders, to another Tick Mill trading update with me, Patrick Munnelly. Want to update the US indices as we head into this holiday shortened trading week. Obviously, many European money centers offline on Monday for Easter, back online today. And as we head into the week, really the main risk event we have will be on Friday with non-farm payrolls. In the interim, we have a bunch of Fed speakers out as well to pay attention to. From a technical perspective, looking at the charts, last week we were looking for the bull bear zone at 5260 to 5270 to hold for an upside extension to test above the price cycle highs at 5320s, which we got on Friday, got rejected from there yesterday. And what I'm looking for now is actually a retest. I'm using that same area, the 5260, 5270 area. You can see it's a low volume area on this 4-hour profile. And we have this ascending trend line support coming in there. We have daily projected range support, 5260. So really looking for bullish reversal patterns in this area again, to re-engage on the long side, looking for a test up into the 5320s. If we break prior cycle highs, the next upside objective is going to be 5340 to 5350. That's the bullish scenario. The bearish scenario will be that we break through the 5250s. And so if we take that on a closing basis, then I'll be looking for a deeper corrective move targeting 5230s and then into weekly projected range supports. The 5210, 5200 level would be the bearish objectives if we fail at the weekly bull bear zone. Moving to the Nasdaq, last week we were looking for the 18,300 area to act as support. It did. We got a bounce, but didn't make any meaningful upside through that 18,600 and have since rolled over again here. So we now have a new quality objective setting up a potential double corrective move, which would take us into the 18,286 level, 18,255. We're going to look for that area to act as support. Bullish reversal patterns there will allow long positions, once again, targeting the corrective trend channel resistance, 18,500s. If we can get through there, then we look for a retest of these price cycle highs, 18,700s. Bearish scenario would be that we fail to hold the bull bear zone as support, which would suggest a deeper move back into 18,000, just above 18,000, 18,050 as the downside target on a failure to hold the bull bear zone for this week. Last but not least, the Dow Jones. Last week, using, again, similar with these other indices, using the same bull bear zone, we were looking last week for a test of the 39,600 to act as support. It did. We retested, but failed to make new closing highs. Got a rejection there. We had momentum divergence in play, and I've since rolled over to retest what I'm using again as the bull bear zone this week, 9,700 to 39,600. Let's just change that. 39,000 with me, 39,660. So any failure to hold this bull bear zone as support, I'm looking for a deeper corrective move to unravel here, to play down into daily and weekly projected range support and the symmetry swing support versus this last significant three-wave corrective move on the 4-hour profile here. So we look for moving to 39,500. From there, I'll be watching for bullish reversal patterns to re-engage on the long side. And certainly if we do hold that area, we would be thinking about an initial target of the halfway back point. So that would take us back into 39,900 zone, and then we'll reassess the price action from there. But key test here at bull bear zone. If we do hold it again as support, then we can expect more ranging type action, and certainly back into the midpoint of the current range, 40,000 would be the first upside objective as we head into the week here. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.